Hello, Culture Matters podcast. I'm so excited to introduce you to our guest. Before I do that, here's a quote I picked just for this episode. The intelligent investor is a realist who sells to optimists and buys from pessimists. Benjamin Graham. My dear friend, Peter Galletta, is on today. And wow, where to start?
Good morning, Jay.
Good morning. Well, I want to say that Peter, well over 3 decades of understanding the markets, understanding the psychology of the markets, understanding the psychology and the leadership in sales, in creating value, in dialogue for ready, willing, and maybe unready and unwilling customers. Background in retail from a family perspective, and a connoisseur of learning and development and oratory and coaching, but a good friend of mine. And every time we talk, we have fun, spirited, philosophical conversations. Actually, one other thing, Peter introduced me to Herbert Spencer, which has spent a lot of time in my head. Yeah, I got to show you after this in the library. Like, I got some of his good books, and wow, so that guy was nuts. But so anyway, that intro alone in itself to Herbert Spencer was huge. So Peter, thanks for coming on the Culture Matters podcast.
Great to be here.
I really want to selfishly pick your brain of what's going on with our mutual friend, Carl Icahn, that we don't, I don't know him personally. I wish I did. Maybe you could help even with that wish, not meaning the psychology behind that, right? But like, what's going on with Carl? Because I know you're a big fan of IEP, the Icahn Enterprises, and maybe you can give a brief explanation.
Well, Icahn is he's an individual, ran a hedge fund for many, many years back in the 80s. He was one of the most successful corporate traders of our time. His claim was he over TW today, and he's an activist. Companies.
Our mutual friend Carl Icahn, this IEP, Icahn Enterprises short debacle. What's going on with Carl, and who is he to the lay person?
Icahn, self-made billionaire, ran a very successful hedge fund back in the 80s. His claim to fame as a corporate raider. He led the takeover of TWA back in the 80s and was very, very successful. He's an activist investor, will take equity stakes in companies and force the board of directors to make changes, whether they either break up the company, merge it, anything he could possibly do to enhance shareholder value and or his position. He's been doing that for many, 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 many years. And he was actually a top advisor to the Trump administration, believe it or not. Most people don't know that on economics. So I hold him in pretty high regard. He really knows his way around the street economically. So IEP is stands for Icahn Enterprises, trades on the NASDAQ, and it's a conglomerate. He owns 85%. It's a master limited partnership that he created, and it makes up of various different vertical markets: automotive, oil, gas, retail, probably over a dozen different types of companies, but 80% of it is more or less automotive parts. That's where the bulk of the revenue is. Their revenue is normally about $14 billion a year. And he owns 85% of that. All right. So recently, he got caught on the wrong side of the market recently. And with COVID, and he really thought the market was going to go deeper than it actually did. And he got caught with his pants down and took a major loss. Maybe it could be one of the biggest losses I think he's ever taken. So the stock historically, why I like it is because it's a limited partnership. So they pass on 100% of net profit to shareholders in the form of a dividend, and then that is taxed as ordinary income. So the way he structured it, and at around $50 a share, it was paying about $8 a year. And its yield was roughly between 15 and 20 something percent until most recently, a hedge fund called the Hindenburg Fund felt that they did an analysis on the balance sheet, and they felt that his particular personal loans to the company that were backed by specific collateral, that collateral was inflated and overvalued. So they proceeded to take a huge short position in the company, putting tremendous pressure on it. And I haven't seen that kind of pressure on it in probably 15, 20 years, except for it gyrating and spiking down in 2008, but then snapping back. It went from 25 to 100.
Wow.
And then it pretty much flatlined. So, I felt it was just a great dividend play to park some good money for some consistent cash flow, and it's been very, very consistent. So the stock is, for sure, it is in play today. So the stock got driven down from or somewhere in the 50s. It bottomed out at about 1820, oversold, snapped back. And then what he did is he negotiated with the banks to move the majority of the corporate debt to him personally and remove it from the balance sheet. Well, that caused the stock to pop off the bottom, probably 30%. I think it went as high as 30 something and change. And now it's just trying to kind of find its level, like water finds its level.
Wow.
And it was looking really good until just yesterday, until Friday, when they announced the most recent quarterly earnings. And that's when the loss that he took in the market showed up on their financials, and the stock got creamed again. But if you're in it for the long haul, I own it all over the place, man. I own it at 50, 54, 30, 20. I don't even know what my average cost is, but it's pretty good. And they decided to cut the dividend this particular quarter in half. Now, it makes sense to me that they cut it in half because there's about, roughly about 300 million shares outstanding. So if you look at the current financials, they were supposed to break even and show a profit about this time, according to specific analysts that were reviewing the stock last year. However, with that particular market loss, it was like $4 billion. So that kind of hurt the company's pathway to profitability temporarily, in my opinion. So
how did they lose the 4 billion?
He was short the overall market.
Interesting.
So he was short
the market, and then someone shorted him. Is that just a metaphor?
Well, no. He shorted the market, took a huge loss.
Wow. Oh, I see.
And then the hedge fund stepped in and put pressure on it. Because at that point, carrying a $4 billion loss on the balance sheet and then taking a look at the collateral and the personal loans, the valuations didn't add up. So it was ripe for the pickings. It was perfect for a hedge fund that specializes in looking for those particular opportunities to come in and pounce on it.
Wow.
And that's exactly what they did. So the stock is in play, but he's got a lot of connections, very tight with the bank. He's controlling interest. I think that, he owns 85% of the float. Morgan Stanley owns another 10%. So there's not much free trading stock in the marketplace, which is why I said to you, when it dropped You said, well, what's the story? I said, well, it's a buy because you're going to probably see the biggest short squeeze in Wall Street history, because they have to borrow that stock and then they have to find it to cover. And if the stock is closely held 90% institutionally, 10% of the float is only 30 million shares. They've shorted over 150 million shares. So the simple math will tell you that if you can't find the stock and it starts going up, it's just going to squeeze, because it's just not a lot of free trading stock at 20, 25, 30, 35, 40. So it could push the stock right back to where it's supposed to be.
Is that what
And
the
fun,
squeeze means for the layperson, right? Like the squeeze is what does that
well,
mean?
he's going to cover it. So he's short the stock, which means that if you're short and you want to flatten out your position, that means you have to go into the marketplace and you have to buy the stock, or you have to find an investor willing to sell you a block of stock. Now, because it's considered closely held, you're not going to really find many institutions or individuals willing to let go large blocks of stock. So you have to go sit on the bid, and you have to bid for 100,000 shares. Well, there might only be 10,000 shares at 25. Now it's 28 and there's only
Ah,
15,000 shares. Now it's 30. I still got 100 and something. I still have 100 million shares to go, which will continuously squeeze the stock until he's able to find the amount of shares that he needs to flatten out his position. So it's a very extremely, but I'm positive that they probably hedge their position with various different other options and things of that nature. I mean, these are really sophisticated individuals. They're not going to go naked short on 100 million shares when you could wind up covering that at $75 and take
wow.
a massive loss. So, there's not a tremendous amount of news that spirals out on it, but it's a simple Wall Street play. But I
Where
like the stock because it pays a huge dividend. It was paying close to 30% yield when it was trading around $25 a share, $30 a share. They cut the dividend in half. It's still 15, 18%, which I feel is it beats the S&P historically.
I think I should add here, that this is not financial advice, but what this is because I feel like that should be a disclaimer, right? But what it is for me is, and then I have some questions on around this, inspiring as the aspiring wealth builder, and I think that we have a lot of those listening to our podcast generally, right? Entrepreneurs, operators, people executives or employees that want to become entrepreneurs. And Wall Street, the language of it, I think is important for that. So I have a question for you is, where has this passion come from that I hear in you around these types of topics? Like, was it, do you think it's built in, or was it over time just learning and studying? And then a follow-up to that is like, where would one start that knows nothing and says, this sounds so complicated? Like, what is this guy Peter saying? So I guess the first part is like, where does this passion come from that you have, that I'm hearing? And then, if someone's listening to this that feels that
Well, the
passion too and doesn't know where to start, go ahead.
passion's in
Sorry.
my DNA. It's been embedded in my DNA since I caught the bug back in the late 80s, and it's never gone away. And the beauty about Wall Street and investing, it's to me, it has always been extremely intriguing, because it's all about strategy and risk management. I originally got involved in this particular situation because I just like the dividend and the cash flow. It's really not complicated, but after 30, 35 years, you kind of understand, listen, there's only 30 stocks that trade on the Dow Jones, 500 stocks that trade in the S&P 500. That's 3,500 stocks. You get to know them over the course of 35 years, and you can make money in every single one of them if you pay attention to one key component, and that's buying them at the right price. So you get a feel economically for what's going on fundamentally with particular companies, and then the economic landscape of where we're at domestically, internationally, interest rates, oil, geopolitical, currency. You know, right now, the market has pretty much snapped back off its bottom, not because the economy is great. We're in a higher interest rate environment. They just downgraded the United States treasuries from AAA to AA. That's kind of a big deal, but the rating agencies do not dictate interest rates. The bond market does. So I'm not really concerned about that, but it does put a blemish on the full faith and credit of the United States government, which has never defaulted on a loan in their entire existence. So we don't want to see that. And that's from spending trillions and trillions of dollars over the last 3 or 4 years. So Wall Street is forecasting the future. That's the reason why we've seen the S&P come up 20, 30, almost 20, 25% this year, not because of where we're at now, but because where they think we're going to be in 12 to 24 months from now. So I still think there's a lot of risk out there. So for anybody just starting out, it's not a one size fits all. It all depends on the individual, discretionary income, what kind of standard of living do you want, how much money are you looking to place, what is your appetite for risk, and then you can craft a portfolio, whether it's preservation of income, preservation of capital consistent with income. Are you looking to speculate? Are you looking to put together a balanced portfolio? Is it a retirement fund? Is it for a trust? There's a lot of different factors to take into consideration. So, there's certain things that need to be answered by that specific individual, company, or corporation that's looking to take advantage of the equity or the debt markets for that matter.
When was the aha for you?
Excuse me?
Like the aha that's in your blood?
Years ago, probably. I'd say probably in the early 90s. I didn't go to Harvard or Yale. I didn't go to Wharton School of Business and study economics and international finance. I picked up the Wall Street Journal, the New York Times Financials, Investor Business Daily, every institutional investor magazine, every single publication. I used to walk down the street when I was working in the city with 6 publications, and I would read them. And at first I read them because I needed to understand if I could speak the way that they were reporting the financial news. This is what personal investors, institutional investors are used to hearing because this is what they read every day. So if I was able to develop the language pattern of how to deliver a conversation very similar to the way they were delivering it in various different news publications, then that would separate me from a lot of people. And that's exactly what it did. So that's how I understood and started to develop the terminology. And just by accident, I was able to learn a lot from that too. Earnings, fundamentals, volume, technical factors, how various other components came into play, market volatility, fear factor, the difference between equity and debt and what drives them and why is there an inverse relationship. So there's a lot that came out of that. I just really wanted to learn how to speak to people and sound intelligently. Not that I really knew at the time what it all meant. But as I started to read, I would take a paragraph out of the Wall Street Journal in the morning in the financial news, and I would read it and I would memorize it, and I would call my clients and update them exactly the way the Wall Street Journal was publishing it on a daily basis. So yeah, the market was up 25 points today on heavy volume. We've had earnings come out in this particular company, that particular company. Things are looking good. This is what's on the horizon, what we could expect over the short term. And this is what we're looking at over the long term. So, yada, yada, yada. And then I would just kind of blend that into whatever positions we were holding or where I wanted to go from there. And it worked.
Your father was an entrepreneur?
Yes.
How did he get started?
My dad was from Brooklyn, and when he was a kid, he worked in a dry cleaner, and then he enlisted in the Marines. He got out. He was stationed in Korea, Paradise Island, boot camp, went to Korea, Okinawa, got out in 1957 at the end of the Korean War, and he started a dry cleaning business. And he owned that for 50 years. And he had the first route in the dry cleaning business on Long Island. And he was also a tailor. So we did a lot of alterations. And then from there, he branched out. As an entrepreneur, he just kept scaling his business. And, you know, from the dry cleaning business, he got into formal wear, limousines, favors, invitations, opened up a couple of locations. Then he opened up a florist. Then he bought the buildings he had the businesses in.
Wow.
Then he bought a multi-family apartment building and started collecting rents. Then we bought individual residential. Then we built commercial shopping centers. Then my mother opened up a bridal shop to support the formal wear, so it was a one-stop shop. Then we started to do bridal shows on Long Island, and my mother actually founded the Great Bridal Expo. And they said that she could never do it. She wouldn't sell any tickets. They allotted about 150 to 200 tickets for her first show. She sold 2,500.
Wow.
So they had 7 or 8 different businesses collectively between them. And it was kind of fascinating. And I didn't really appreciate it until much later on in life when I had to, you know, the opportunity to kind of look back and say, wow, that was pretty damn impressive. So yeah, he was just a natural. Both my parents were just natural entrepreneurs and did very well. They were very well respected in the community. Everybody knew because we did all the proms, we did all the weddings for friends, family,
Wow.
New Year's Eve parties. They would all come to Apollo Formals and Justel Bridal. And then they would all come to Chick's Cleaners for their dry cleaning. We were going to franchise the dry cleaner. He actually sent me to the Manhattan School of Dry Cleaning, and I was going to scale it up, and I was going to renovate, and but that never happened. And then shortly after that, I mean, by the time I was 16, 17, I knew how to run all the businesses because I used to go to work with him every single day. And then I became his driver when I learned how to drive, and I drive him around and make the rounds with him. We would go to the cleaners, we'd go to the tuxedo store, we'd go to the other one, we'd go to the banks, we'd go to certain catering halls, relationships. I mean, I did everything with him. So I observed and I watched.
Wow.
How he and his I think his biggest strength was the way he communicated with people and the way that he made people feel. He'd light up the room when people would come into the dry cleaner or the tuxedo store, wherever he may be. They all wanted to speak to John. Where's John? Hey. And it was just incredible to see the kind of respect. And again, I didn't realize it when I was young, but I realized it a lot later. Same with my mother. Mother would even light up a room, forget about it. I mean, that was just, oh my goodness. So yeah, it was that was very interesting. And I think that's where the entrepreneurial spirit came from. And the reason why I decided to go do my own thing, get into finance, I was bored with those businesses. I just, they gave me the opportunity to go to one of the best prep schools in the country, elevate my education, and take advantage of a lot of opportunities that they didn't have. Long Island was running rampant with drugs and crime, and they didn't want me to get involved. I was kind of going down the wrong path. And they kind of gave me the opportunity to step out of that. And when I did, that's really when the world started opening up to me, because I really believe that the more you travel, the younger you are, it's better than any history class you could possibly take. The impression, the culture, you just learn so much more, and it kind of brings things full circle. And yeah. And my father didn't really have much confidence when I told him what I was going to do. He said, you have no formal education. You can't compete with these people. He didn't even think I had the brain power at the time to acquire the licenses that I need. And boy, I had a chip on my shoulder. So I became, how do I say it? Annoyingly obsessive. I lived, I ate, I breathed the market. I did nothing. I mean, that's all my conversations were. And my friends that knew me the most said, man, oh man, oh man. And they didn't want to hear it at a certain point, because I just kept going on and on and on and on and on. And sure enough, I was so focused and so obsessed that I had to do a couple of basic things. And there was no better feeling in the world than making that happen. And then my father actually joined my business 6 years later and ran all the operations.
Wow.
Took care of all the money. He was very interested in the market. And when he saw what I put together and he had an opportunity, and he came down with my grandfather and saw the way I was running the firm, he was just in awe. And I was proud. That was a phenomenal time in my life, was to make that happen, and totally, completely change his mindset in terms of what I was capable of.
What's your advice to someone listening now that's in that position where with a parent, they don't yet have that sense of pride, or they're, like, how did you do it? What wisdom
you got to
you distill?
You got to believe in yourself. I had such a tremendous level of confidence, and I mean, my competitive nature. There was nothing, absolutely nothing, that was going to stop me until I achieved what I was after. Nothing. If you got in my way, I just steamrolled right over you. But you know what? That came with some sacrifice. I let go a lot of the people, the places, the things. I stopped going out, and for a while there, I kind of just isolated because I needed to. It was a little overwhelming for me in the very beginning. I mean, when I got a book this thick to take a securities exam, oof, it took a little while. But then I taught myself the skills on how to take that exam, because it was a multiple choice exam, which means that you have the answer sitting right in front of you. You really do, right? I mean, so, you get a question, you got a multiple choice. Well, the answer is there. So I do process of elimination. Well, it's definitely not this, and definitely not that. Now it's 50-50. And if I studied correctly, and I did what I needed to do, the chances were that I was going to pick the correct answer. And I proved that right, because I blew that test away.
Wow.
almost a 90 on it, which I was shocked myself. So, and then those little wins, was a little win here, a little win there, a little win here, a little win there. You know, I take one step, very small step, very small step, very small step. It's like going to the gym. You start out, you know, you're benching 50, you're warming up, taking good supplements, you're eating right. Now you're benching 75. Now you're doing 80. And you're just very incrementally building the strength to scale your weight to get the results you're after. Same exact thing. So your mind is a muscle, the brain is a muscle, right? So you want to train the brain. And I didn't really know it at the time, but that's what I was doing. I was just training myself, little wins, building confidence till I got to a certain point. I just didn't doubt myself anymore. I knew no matter what it was, I didn't need the formal education. I didn't need to be part of the sperm donors club. I didn't need to be well connected. I had what it took to compete in that arena. And that in itself was like confidence on steroids. Then there was no stopping me. Then it was just, woof, look out. And then it became wildly out of control, because then you start to get arrogant. You lose that humility. And, you know, and that's where, you know.
Yeah. What do you think someone needs to hear right now that might be less humble in action than they think they are in thought?
Understand what true humility is, and understand why it is advantageous to be humble as opposed to arrogant and cocky. And the old adage, and I'm sure you've heard it, you meet the same people on the way up as you do on the way down. So, you know, even if you're out to a restaurant, you have a waiter or a young kid, or, you know, somebody that hasn't really found their way yet. If you're really a true inspiration and a true leader, you're going to want to lift that individual up instead of being arrogant and be instead of being arrogant and condescending and having an attitude as better than thou. You're changing the context of the conversation, and maybe you want to find some interest in that individual, and like, hey, you know, what brought you here? How come you're waiting tables? You seem to be, you know, is the stepping stone for something different, as opposed to you know, can I have an extra fork, a knife, this, that, or just barking orders and just ignoring the individual like he should cater to you. And I use that as an example because something clicked, and I got away from myself because success started to come fast and furious. And it's amazing how you lose sight of who you were in the very beginning as opposed to where you are now. And when you're in the midst of it all, it's very difficult to recognize that until you get slapped in the face. And I got slapped in the face, and I kind of snapped out of it. And I said, you know what? I'm never going to treat people like that ever again. And I never did.
What do you want the audience to take away from this conversation?
Well, I mean, everybody's at a different place. I would say whatever it is, have a plan.
Why?
Well, because you need a direction and you need a target, because if you don't have one, you can't hit one. And you have to work backwards. So if you're young, all right, let me answer it this way. If you're young, where are going to be in 5 years from now? and work backwards and have a specific plan of attack. It needs to be open to adjustment because nothing ever works exactly the way we plan it. There's going to be some variation to it. Doesn't mean that you're not going to be able to get where you're going. It's just not going to be the exact vision that you had when you first started. So you've got to leave some room for variation, and then break it down annually, then break it down monthly, then break it down to specific tasks. Now you're taking a lot of the thought pattern, a lot of the fear, the anxiety, the stress out of the situation so that you could just execute and then make your adjustments along the way. So, so somebody that's early on, break it down into decades. Life goes by very, very quickly. So from 20 to 30, 30 to 40, 40 to 50, hey, that's 4 decades. Now, your 20s thinking your 50s is like, another galaxy away. Comes up quickly. So planning, I feel, is very, 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 very beneficial. Somebody that's, let's say, middle-aged, in their 30s, in their 40s, had a couple of bad breaks, weren't prepared for life, are going through a tremendous amount of adversity, second guessing themselves, don't really have the right mindset. Find yourself a mentor, a role model, a coach. It only takes 12 months, maybe 18 tops, to completely and totally reinvent yourself and reposition yourself to obtain what it is that you're after. Doesn't take very long. And I would say to somebody that it's never, somebody that's maybe, in their 50s or maybe even a little bit older that had some bad breaks or that's not quite where they want to be, I got news for you. If you look at the statistics, the majority of people out there haven't enjoyed true success until they reach their 50s. So, the old saying, don't give up 5 minutes before the miracle.
Yeah. Wow. I think Buffett became a billionaire at 51.
I think it was younger than that. I think it was a little younger than that.
Late 40s, maybe. It wasn't as young as you'd think.
No, he wasn't. But I don't know that it took him till he was 50.
That's when the first three came.
Let me say this about Warren Buffett, Steve Jobs, Bill Gates, Elon Musk, the Henry Fords, the Vanderbilts, the Mellons, the Carnegies of the 21st century. They are exceptions to the rule. Not everybody is going to go out and start an electric car company and hit a generation at the time where there's a paradigm shift in technology, like Steve Jobs with the iPhone, like Bill Gates with Microsoft software, and become some of the richest, wealthiest individuals on the planet. That is the exception to the rule. If I would say be practical and be more realistic. You don't need that kind of wealth to live a really good standard, to live a high standard of living. Because listen, after you've accomplished your particular standard of living and you've got financial freedom, what do you do with all the rest of the money?
Well, you got to stare at it.
You help other people.
Oh, okay.
So, be practical,
I sound terrible.
Well, find people, and I'll use my father as an example. Somebody that sacrificed, worked really hard, had a vision as he went along, and when I say he's self-made, right? A lot of people say, well, I'm not self-made because a lot of people helped me get there. Self-made, in my terms, is he didn't inherit it. He had a tremendous amount of loyalty We had people work for us for 25, 30 years that ran the cleaners, ran the tuxedo stores, because he treated them very, very well. And they
Wow.
stayed. And a lot of them went on to open up other businesses and compete directly with us. And my father helped a lot of them do that, even though they were our direct competition.
Wow.
That's just was his nature to do that. So you want to find somebody where, somewhere in between. I mean, where whatever it is that you're looking to do, find somebody that's doing it, and that it's doing it at a level of success that you'd like to enjoy, and then work twice as hard as they do. That's what I did. I worked twice as hard as anybody in the room. I turned the lights on, I shut the lights off. I didn't leave until I got certain particular results. And I benefited from that.
Hey, do you think people underestimate the value of like 10 million bucks and overestimate the necessity of a billion?
I think people that have never experienced that kind of wealth don't understand it, because with money comes responsibility. And that's why you see a lot of athletes, a lot of individuals that hit the lottery. They don't know how, take Mike Tyson, for instance. His career earnings were 600, 700 million. He wound up in prison, lost everything. Now, yeah, he's the youngest heavyweight champion. Probably one of the greatest heavyweights ever. Nobody was better than him in the ring. But he wasn't taught how to handle himself outside of the ring. And unfortunately, I see a lot of, and I every day I'm with small to medium business owners, and I hear what their pain is and what they're struggling. And the reason, and I see a lot of businesses I do business with do very well and thrive for 3, 4, 5 years, and then all of a sudden they're out of business. Why is that? Or they struggle and they're looking for they're looking for capital. Why is that? Is because they went into business and they had a vision, and they were very, very, very good in the front of the house, working with people, putting out a good product, sales, generating. But what they didn't have is they didn't have the experience and the know-how how to manage their cash flow on the back of the house. So a lot of businesses use their corporate checkbook as their own personal checkbook. I want to go out and buy boats and cars and planes and trains, and and then all of a sudden what happens is they're not prepared for a downturn in the economy. Or here in Southwest Florida is very seasonal business. So you can go as a restaurant 4 months, 5 months with very minimal cash flow. If you're spending like a drunken sailor, well, and you don't know what it costs on a monthly basis to carry the business, make payroll, then what's going to happen when all of a sudden you're doing, $1 million a month, and now you're only doing 100,000 a month? Well, that's not sustainable. And I find that to be a very, very common denominator on why a lot of businesses and entrepreneurs fail. They do not know how to manage when they come into money. Or they don't have the right advisors.
So in that case, like, right, you're saying the 4 months that are 100, if 8 months are 1 million, it's 8 million, and then the 400, 4 times 100 is 400. So that's 8,400,000. So that's 700K a month, let's say, is the average. It's the average. It's not 1 million. So is the idea that the person can run up their expenses and think it's 1 million a month business with 1 million a month in expenses, but the average isn't 1 million a month, it's 700K a month, and they destroy their business without realizing it. They're not ready for the storm. So they need people like you to help them even see these blind spots. That's the first thing that came to
The
my mind.
blind
It's
spot
like,
is they're focused on top line revenue, not net profit.
yeah, could you unpack that a bit?
Okay, so if you're making $1 million a month and your net margins are 10%, that's 100 grand. If you're spending 150, you're running red ink. So you could be doing 6 million a year and still run red ink because let's say your profit margins aren't where they're supposed to be. Let's say you're out on the boat. Let's say you're on too many vacations. You're not running the store or you're not running the business to maximize your net income. What happens is your cash flow starts to dry up intensely. Now you're overextending yourself. Now you don't understand. Well, wait a minute. My business is doing 6 to 10 million. Why am I in debt? Because they don't understand how to manage their cash flow. That the business can only make on 6 million, can only make 600,000 a year at a 10%.
And maybe because psychologically they're living at the top line, so they might be overspending, not realizing it. You see that every day.
Every day that they're, oh yeah, I do 6 million a year. No, you don't. No, you don't. Well, yes, I do. Well, let me explain to you something. You take in 6 million a year. What does it cost you to run your business? 5.6 million. Let's talk about what you have afterwards. It's not what you make, it's what you keep. Oh, I never looked at it from that perspective. What? How did you wind up in business? No, I'm just kidding. No, and that's why when I go in and I sit down with people and credit card or digital payments, payroll, those are, and human capital. So labor, payroll, and digital processing is different than it was 10, 15 years ago, where it was only 60% of cash flow for a business. Now it's 90%. Meaning that a business doesn't take in a tremendous amount of cash now. Now they take in all plastic. So if those are the top line items on their balance sheet, it's very simple for me to come in and say, well, you're spending 40,000 a year in processing fees. You're spending X amount of dollars in labor and X amount of dollars in payroll costs. If I was able to provide you with a solution that will eliminate your processing fees and put $50,000 net after taxes back into your business, would that be something that you'd want to explore a little further? I could put that together for you overnight. Now I've got your attention because I'm not really coming to you with something that you don't already do. I'm coming to you offering you a solution to pain, where if I said to you, well, what would it take your business to net after taxes the gross equivalent of $50,000 net a year? How much more business would you need to do? And I do the calculation real quick based on their average sale and how many customers they would need. And it becomes the business. You cannot increase your business to do that unless you expanded and opened another location, which we both know is just not going to happen right now. So if I can come to you and put this money back into your business and your gross equivalent is X amount of dollars, wouldn't you do it? And the answer is a no-brainer. The answer almost 100% of the time is absolutely. Not yeah, maybe, it's absolutely. It's like, do you like the idea? Yeah, it sounds like, no. Do you love the idea? Yeah, I love the idea. It sounds great. That's the response you're looking for. So if I come to you and say, hey, listen, I could put $50,000 back to your bottom line without you having to do a thing, might cost you 1,000. Would you spend 1,000 to make 50? Of course you would. Great. Let me put the particulars together. I'll give you a call tomorrow. We'll go over the numbers. If you like what you see, you're comfortable, the timing is right, a couple of pieces of paperwork, and I'll make the move for you. It's that simple. Because see, I already know where the pain is for these small businesses, and it's cash flow, and it's having an advisor. So I bring a lot more to the table than just being the digital guy, because I wind up becoming an advisor to them. And I start to advise them and say to them, well, you know what? I've got 10 or 15 other clients that are in the same exact business. Let me share with you a couple of things that are working really well for them that I think might work well for you. And I stop in frequently, and I'm always bringing ideas and always giving them food for thought and always helping them improve their business, sending them articles, emails, sending them clients. And now with the digital payment space and the technology that we have, it's not so easy for somebody to walk through the back door and say, well, I can save you a penny a transaction. The first thing they're going to do is pick up the phone and say, hey, somebody approached me. They're going to give me that professional courtesy as opposed to shut the door and just move on to do business with somebody else. Because of
how important is the relationship in that?
Everything. That's what it's all about. Because what I'm doing right now with my business is I'm scaling it to the point where I don't have to build a team around what I'm doing. But what I've done is I've created a process and a workflow to educate my clients to become referral ambassadors for me. So 100% of the business that I do now is all referral based. I don't have to go knocking on doors, making phone calls, doing endless social media posts. And I just don't need to do that if I scale the business the right way and I have other people do that prospecting for me, because my closing rate on referrals is 100%. And then I build that relationship solid. And these are all business owners, so it's a beautiful thing. So, you know, when I walk down the block or I go to dinner or I go into a retail shop, I know these people by their first name. I get to know who their wives are, their kids. I get to know, I see them out and about. We do things together. We play golf together. We see at community functions. I might support things that they're doing for specific causes that they're doing. It kind of all comes together, and it's all about the relationship. And if I provide them with white glove service, I'm always there. I always answer the phone. It's not the technical issue. It's not the problem that they have where, you know, the app's not working, an employee can't access his paycheck, or my terminal is down. They want to know that if they have that problem, they pick up the phone, I'm there in an instant, and I correct it. And that's how I get them to become ambassadors for me, because nobody treats them that way. So my best form of advertising is word of mouth. And it's the least expensive. And I find that at this point, at this juncture, it works really well for me. And then I can present them with another solution. Hold on. So that's why I enjoy the passion of working with business owners, because it kind of blends together all my background and my experience. And when they find out, you know, that I spent a lot of time on Wall Street, they start to bring up other topics. Well, I have a, self-directed pension fund, or what should I do with my cash flow? Or, what are you doing? Or, I got $1,000 I want to invest. Where can I put it? What stock can I buy? When clients and new clients start asking me those particular questions, I know that I've really bonded with them, because they'd rather give you the boat, the jet, the kids, the car than their money.
Wow. What do you mean?
Well, listen,
Very personal.
The majority of high net worth individuals are so egotistical and they're so protective over their net worth that they would rather give you the boat, the car, the house, the kids than fuck with their money, because they're egomaniacs. And that's what rules them, is the almighty dollar. Which is really why it was pretty simple back in the day to acquire high net worth individuals, because number one, they had a lot of money. Number two is they were degenerate gamblers, always looking to, and they could afford to, put down $100,000 and lose it overnight, but they're looking to make $5 million. They're greedy. So yeah, they, when they start opening up, I call it opening up the spigot. In other words, they're very, very hesitant in the very beginning until they kind of get to know you. Once they kind of get to know you and trust you and like you, we've heard that somewhere else before, right? Know, like, trust. Nothing more powerful than getting, like, and trust, because once you accomplish those three things, they could literally become a client for life if you treat them the right way, because it's a lot easier to retain a client than it is to get a new client. And in corporate culture, as you well know, turnover rate costs millions and millions and millions of dollars to the bottom line to train, hire, rehire, retrain, than it is to just invest and train your existing employees. And a lot of people don't grasp that concept. Blows my mind every time.
I think a testament to your philosophy is, for some time now, I'm like, you got to get on podcast.
Well, we always have this conversation.
We have profound conversations, and because of our relationship, and now here we are, marketing the spirit of our friendship to the world, and which I think the order matters. So I'm in agreement about relationships and culture. I think it's just an interesting testament or example to what you're talking about, is that because I resonate with what you're saying, and we have a friendship from that. I'm like, you got to come on the podcast, right? It's the order that matters, like the relationships first, and the rest will take care of itself. The marketing will take care of itself.
Well, it's nice to be able to kind of take advantage of that particular opportunity in the relationship to share the wisdom and the life experiences that hopefully maybe one little tiny little thing that I say in our conversation could make all the difference in the world to somebody that's listening. I might not ever know what that is. But the beauty is the only way, I know if we don't do it, we ain't got no shot at it. But for anybody that's listening, hopefully they'll pick up on one or two things. They're at a certain point where that's what they needed to hear. And now that sets them off on a whole different trajectory.
Final question. Biggest lesson 2023, and how you're using that to win, because I know you're winning 2024, 2025, 2026.
I would probably say in the last couple of years, patience. You've got to have patience. I mean, wisdom comes with age, right? That's why they say the old wise man. Why is he old? I mean, wisdom comes with age and life experiences. That's how you gain wisdom.
Mm.
So I've learned patience because for many, many years, I battled patience. Didn't happen fast enough. It's not happening fast enough. Why couldn't I get this done yesterday? Why always why it's not happening fast enough. So when I recommitted myself to doing what I'm doing now, just an overwhelming sense of calm where, okay, I know a lot more today than I did then. I don't need to operate at a high level of stress, worry, and fear. You've got the experience and the know-how. Just have patience and execute your plan. And I've been able to preserve a tremendous amount of energy by just having patience and executing on the plan. Instead of running around like a crazed lunatic, trying to make 25 things happen all at the same time. I've just learned that that's just not necessary.